Good evening. Bigger than expected, with the promise of more to come. The Reserve Bank today lifted the official interest rate for the first time in 11.5 years. It's gone from 0.25% to 0.35%, with the aim of cooling the economy and putting a halt to surging inflation. Nine's Eddie Meyer begins our coverage.
The man with the fates of millions of borrowers in his hands arriving for one of his most important days at work. Reserve Bank Governor Philip Lowe has only ever lowered the cash rate during his term, never lifted it until today. Watching the announcement, homeowner Deborah Watson.
The Reserve Bank has hiked interest rates for the first time in 11.5 years, up 0.25%. The new cash rate now 0.35%. Now this is an aggressive...
It's a big jump.
Like many, surprised.
That is higher than I think everyone was predicting. I mean, that's going to hurt a lot of people. We need repairs and renovations on our property, and, you know, with inflation having gone up as well, we're going to have to really manage that tightly.
She wasn't the only one caught off guard, most expecting a more modest 0.15% lift.
And our view was that they wouldn't lift interest rates until we get to June next month, and we thought by then they'd go by 0.4. There were no economists in the surveys that actually got the actual result right of the 25 basis point, the 0.25% move.
The last time the cash rate increased was November 2010, up 0.25% to 4.75%. The typical standard variable rate back then, around 7.8%. There'd be few, if any, borrowers under 30 who've experienced a rate rise at all. They might remember 2010 as the year Apple released its first iPad, while another pandemic had the world on edge, swine flu. Now the pressure is surging inflation, hitting a shocking 5.1% last week. In a rare news conference on Rates Day, Philip Lowe clear about why official rates have to go up, an inflation rate that could well hit 6%.
These numbers are lower than the inflation rates in most other advanced economies, but they are higher than we have experienced for many years, and they are higher than we were expecting.
And that can mean only one thing.
Over time, it's not unreasonable to expect that the interest rates would get back to 2.5%. And how fast we get there and whether we get there is going to be determined by events. It's also relevant that households have much more debt than previously, and many households have never experienced a rise in interest rates.
The average new mortgage is now around $750,000. If the official rate hits 1.5%, that would cost an extra $561 a month in repayments. When it hits 2%, it's $768 a month more. And at 2.5%, you'll be paying $968 more a month.
I don't know how much higher they can go without it really starting to affect a lot of people.
Today's increase alone adds $99 a month to that $750,000 mortgage and $131 more a month for a $1 million loan. Cheap fixed rates might have all but disappeared, but it's not too late to get a better deal.
Variable rates are also a little bit lower at the moment to entice new borrowers in. For example, Bank Australia is offering a variable rate at 1.99%.
And not everyone is predicting a slump in Sydney property prices as a result of higher rates.
And that may impact some buying and selling decisions in the shorter term. But the Sydney market clearly remains undersupplied. We only just have to look at that rental market, and rents are still rising sharply and vacancy rates are falling.
There is a group of Australians for whom today's interest rate rise will actually be welcome as long as the banks pass it all on. And that's pensioners and self-funded retirees who rely on their savings for their income but have been earning very little on their deposit accounts for years.
Term deposit rates range from 0.25% to 2%. Obviously, people have had to eat into their capital, and that causes a lot of anxiety.
That anxiety might well now shift to overstretched borrowers. Eddie Meyer, 9 News.
Mark Burrows is with me at the desk. Mark, how have the Big Four reacted?
Well, Pete, it seems the banks are just as shocked as the rest of us. In the days when the official cash rate rose and fell regularly, those rates were passed on almost immediately, but so far silence from the Big Four. Big because they have 75% of the home loan market. But it's not a matter of if, but when they will make the move. It's like a game of chicken. When one does raise the rates, the others will follow. The average rate for a new customer is 2.49 variable. Expect that to go around 2.74%. Tonight there are still some variable interest rates below 2%. Homestar Finance is offering 1.79%, so big lenders may face some strong competition. Either way, Peter, the honeymoon is over.
Mark, thank you. The rate rise could spell bad news for